Hi everyone. Can you guys hear my voice? Muhammad, can you hear me? Hi Richard, can you hear me now? Right. Hi everyone. Great, great. So guys, as you guys can see on the screen today, we will talk about the fundamentals. Okay. On what should we pay attention on when we trade on forex and also perhaps gold and oil. Hi Ellen. How are you guys doing recently? Make any great profit? Hi Kadar Rizna. Nope. Hi, Giuseppe. Oh, I see someone say yes. Fasico. Do you mind to share where you gain your profit? Hi, Mariam. So I will always just wait for a couple more minutes, okay? See is any more people to join us today. Kada Kadadzena, am I saying your name correctly? Not enough money to invest. Maybe here is the place that you can make more money. Oh, cut. All right, cut. We can always start from small, okay? You can always start from from 0.01. And if you are not very confident, you can always go back to the demo account, try all your strategy and test it out, do all the back testing before you go live, okay? Go to the real trading. No rush, okay? As long as you are comfortable, as long as you're confident enough, only you go to the wall and test your strategy. Any thoughts on the goal upcoming movement? Up or down, you guys? What is your thought? Hi, Makati. Love to see you here as well. So today's session is like I will try to discuss basically what are the factors that will fluctuate the market, that will increase the volatility in the market. So that depends on you whether you love a very fluctuated market or you love a sideways market. Because normally sideways market is easier to control. Uh but yeah, then the outcome is you got lesser profit. Okay. If the market is very fluctuates, then of course you have a chance to make great profit, but at the same time you also come with a great risk as well. Yeah, Muhammad. Yeah, because for scalping we always go for more quiet markets, right? Hello, Lalu. Great to see you again. Hey, so let's get started. Hi, Noel. So, as always, before I start, allow me to read out the risk disclaimer, okay? The information provided in this webinar is for educational purposes only and should not be considered as financial advice. The content presented in this webinar is based on information believed to be reliable, but not guarantee is made as to its accuracy or completeness. Pure Prime and I shall not be held liable for any losses, damages, or expenses incurred as a result of the use of the information provided. Trading and investing in financial market involve a high level of risk, and it is possible to lose all your invested capital. Before making any investment decision, it is important to carefully consider your financial situation, investment objective, and risk tolerance. All trading and investment decisions are solely your responsibility. participants should be aware of the risk involved and only trade or invest fund that they can afford to lose. Okay. Right, let's get started. So today, we'll talk about the fundamentals, what things or what factor that we should be aware of, in the markets, and where it does it often will stir the markets up or down. Okay, and these are the content that we're going to cover today. Trade on the news and economic indicators. So I'll discuss with you what are the news or the economic indicators we should always monitor. Even though sometimes we are not fans of trading on news or trading on economic indicators, but we should aware, right, as a pro forex trader. Okay. And secondly, I'll discuss with you some of the the pairing volatility at different time. Okay, maybe some of you know about it, maybe some of you don't know. Okay, I will bring these ideas up, and you guys can learn from it. Okay, and thirdly, leverage on the platform promotion. Okay, this is like out of the fundamental, but then sometimes we omit it, but it is a good thing that we should consider, before we pick a platform to trade, and any advantages that we can actually deprive from it. And fourthly, is the upcoming economic event. I will pull up the recent economic calendar and discuss with you what are the upcoming economic events that we shall pay attention on, right? So first of all, trade on news. So before I start, I would just want to give you guys this idea. So today, all the topics that we discussed here is just all about volatility. Okay, everything, whatever I discussed today, all the factor is just about the volatility. So it depends on you whether or not you love the volatility, with a high volatility, or you love to trade with a minimum volatility. But today, the core, the all the factor behind it, okay, is all about volatility. So first thing, trade on news. So it is like when you guys make a buying or selling decision based on news that can affect the market. So it's not any news. So you don't tell me like, oh, Taylor Swift got a new boyfriend, then you expect something's gonna happen to the market. No. Or like Mark Zuckerberg and Elon Musk, they want to go for a ring fight. It's like financial news, and then you go and look at the Meta share prices, or Tesla share prices. It's not like this. I already filter some of the news, then I'll put it up. I'll discuss with you what are the news that we often look at as a forex trader or a commodity trader. Okay, why are we looking at all these news? Just like I mentioned early, this news that can create volatility. So we love the movement, right? You imagine like when the market just trade like extremely sideways, not moving at all. Okay, some of the pairing is like this, maybe like Canadian dollar, like Swiss franc. The movement is like slightly lesser than if compared to other major pairing. Then maybe one day it just move like 10 pips, 15 pips. Okay, and then you will feel boring. But if you are a risk lover, your risk appetite is very, very high, then you might go for this thing, when like before and after the news came out, and then you will expect a very, very high market volatility, and then you go ahead. So why are we have to know about this is because we trader aim to capitalize on the price fluctuation. When there's a fluctuation, only there's a chance for us to make money, right? Imagine it's just like stay at $1. Okay, this is impossible in the forex world. So, for example, it's like some shares that we are not familiar with, you never heard of, and then just stay $1 for 1 week, for 1 month, and you have no chance to make profit from it. You can't. I mean, you can sell at $1. You can buy at $1. And then what you lost is all the commission that incurred with the trading. So, but there's like no winning and losing in the trade. So there's when there's a price fluctuations, only when there's a chance for us to make money. But of course, chance for us to make losses as well. So But this is very different. So the next thing that we're going to discuss is the economic indicator. So what are the differences is for economic indicator is more we can actually predict. It's like we can analyze it. We have the previous reading, everything that is more systematic. But it is harder for news is because the perception on the news, on the same news, can be very throughout the time. So for example, like maybe 2 years ago, Jerome Powell say something hawkish, say he want to increase the interest rate, and you compare to what he said yesterday, say inflation is still high, the Federal Reserve want to continue with this, maintain this interest rate at this level. The reaction in the market is different. The perception in the market is different. So by saying the market, it means we have like tens of millions of trader in the market. So it depends on the group of people who are the majority who thinks this news is positive, then you have a positive a reaction in the market. If more people think this news is negative, they don't believe in this, then it's negative, then yeah, you will have a negative in the markets, you will go down, things like that. So it is very hard to tell whether or not this news is good or bad, even though same things happen. It's like very, you are playing a mind game with all the people, all the participants in the market. Okay, so I would say it is hard. Okay, but I will tell you what kind of news that we should pay attention on, and of course, it is required a lot of experience. You have to know the market well, and by this time, he say about this. What's next? For example, like today, when the ECB come up with the CPI, and then maybe after that, the ECB chairs, Christine Lagarde, she's going to come out, to address this CPI, right? So whatever she say might, have an impact in the euro and also maybe other pairing. But let's say, for example, last year she say inflation is very, very high, we're definitely tightening the monetary policy. And she'll still going to say something like, the inflation is still yet to reach our targeted rate. We'll still hold this monetary policy. You think there's a different? Of course, I will say this is the different. Because why? The inflation from last year and inflation from this year is different. And the economic growth from last year and economic growth from this year is different. So this is widely rely on what's the market participants going to perceive on the thing that she say and the reaction on it. So you guys have to analyze it more thoroughly than by if you compare to just look at the economic indicator. But at the end of the day, it's still the same. We just want the fluctuation, but then you have to make a good analysis, and then you have to predict the next movement of the things that you trade. And if you got it correctly with all the experience that you get, yeah, you can make good money on it. So what are the news that we should look into? Okay, I have like 4 categories for you guys. Okay, this is the things that I can come out. But of course, under a category, there's a few topics. Okay, first of all is central bank. This is definitely the top priority 3-star event. All central banks, because why? They are the one that come up with the monetary policy. And we know monetary policy will have 100% direct impact on the currency. We know the price of the money is about interest rate, and we know central bank are able to tune the interest rate. So whatever they do, whatever they say, will definitely have a direct impact on the currency. So we know I can discuss some of the what's happening now in the market is where okay, first thing is Federal Reserve. Federal Reserve is the biggest, I would say, the biggest central bank in the world. So whatever it say will have a great impact in like the general forex market, because I would say 80 to 90% of the thing that we trade today involved in USD. So, and then Federal Reserve can affect USD. So it is very, very important to know what is the next move for Federal Reserve. So since end of last year, people already start to discuss the inflation in the USA is going towards their targeted rate at 2%, and they predicted, before we get into 2024, they say at least 4 times the Federal Reserve will cut the interest rate. What's that mean? It means the DXY, the dollar, is already at its peaks, because moving into 2024, we will see we are expecting the Federal Reserve will start cutting interest rate and will ease the strength of the dollar. Okay, this is what the markets expect. When we just get into 2024. But then what happened? You guys know, since January, February, March, April, all the economic indicator just suggests that the US economic performance has been very, very good, and the result of it will be the inflation will be more sticky, will be more stubborn, or even bounce back. And the latest CPI shows that, yeah, it is the case. And what Jerome Powell say is they have the surprisingly high inflation reading, and the Federal Reserve expect to hold the interest rate at 5.5% for longer. So initially, people predict that in June, maybe we will get our first rate cut. But now, people start to discuss we only get 2 rate cut this year, and it will start at the end of the year. So you guys have been participating in the markets. You guys have what happens towards the dollar. Dollar has been very, very superb and trade to 106 for the DXY. Okay, and it's like the highest levels in 2024. It is so good. So these are the things, and we know what. So we always look at the FOMC meeting minutes. We always look at Jerome Powell, what he's going to say, and it will have a direct impact on the markets. And the situation now is, at first, we believe the Federal Reserve will start cutting rates, but all the economic performance indicator just shows that despite we having a very, very high interest rate, the highest indicates, but the US economy still remain very resilient, very robust. So you guys can gauge what they say, what's the news come out, and what's the perceptions from the markets, and you guys can do your own analysis and then apply to all your day-to-day trading. The next thing is BOJ. Okay, we know what happened to Japanese yen already, right? So Japanese yen has traded to the weakest levels in 34 years, especially against the USD. USD has been very, very super, but the Japanese yen have a lot of selling pressure, despite they having the first ever rate hike in 17 years. But everyone just shorting it. So what we are waiting here now is intervention from BOJ. We don't know when it's going to happen. Just that the finance minister from Japan is always come out and warn the market, say this is this is not healthy to the Japanese economy. They definitely will do something. But you guys know what happened. It's just for the USD JPY pair just climbing higher and higher. Like there's no turning back. There's no tomorrow. Okay, so and we know next week we'll have the BOJ interest rate decision. So whatever they say in the monetary policy statement, it will definitely have a direct impact on the Japanese yen pairing. And you guys can tell after the news, and you guys can learn from it. At the moment, it's saying we start to observe there's a slight inflation in Japan. So we have the healthier wage growth in Japan. So this is why it leads to the Japan to scrap their yield curve control. They start to have this monetary tightening policy. Okay, this is like never happened for the past, I think, nearly 20 years. So whatever they say, whether or not it is very contradictory with their previous addresses, or it is in line with what they say early on, and what is the impact on the Japanese yen, you guys tell me, okay? And the next thing I want to compare with 4 central banks and their monetary policy. One, on the one side is Bank of England and European Central Bank. We know that their CPI reading, which is the inflation gauge, the inflation reading, shows that they are already near to achieve their targeted inflation rate, and at the same time, their economic performance is a bit wobbly, I would say. It's not as good as US. Okay, it's kind of weak because of the high interest rate environment. So now the market is also start to discuss when are they going to have their first ever rate cut. So we know the upcoming things, the upcoming policy statement they're gonna make, all their official come out to say something. Whatever they discuss with this backdrop, you guys can make your own analysis and apply it to your trade. And on the other side, we have the Reserve Bank of Australia and Reserve Bank of New Zealand, because these two countries they still having an inflation rate at near 4%. And if you compare to a 2% targeted rate, there is still a distance away. And from the previous monetary statement from them, from the Reserve Bank of Australia and also the Reserve Bank of New Zealand, they say something quite hawkish, which means that they say no, there's no chance we don't discuss rate cut yet, because we are still far away from a 2% inflation rate target, and we definitely want to stick with the current monetary policy, which is maintained at a very high interest rate, so that we can curb the inflation. You compare this for central bank with the backdrop of gradually decreasing inflation, and for on the other side, sticky inflation at 4%. And what they say, then you can make your own judgment on what they say, and you can apply it. Okay, so this is the central bank and the monetary policy is very, very important. Okay. Then secondly is the geopolitical event. Geopolitical event, needless to say, everyone know it. We have the very heightened tension between Iran and Israel now. Okay, this is one of the things, and what it will have an impact, definitely dollar as a safe haven currency. Secondly, gold, and also oil, because it's happened in the Middle East. There's a war. It will always trigger the uptrend for gold and oil. Okay, this is a geopolitical event, and also not just a war and like trade war between China and US. It is also a thing. It's a geopolitical events that we also have to monitor. And guess what? End of this year in November, we have the US election. Who knows? The Trump will go back, take the throne again, get back to it, go back to the White House and become the president, and maybe he will declare war again with the China. I mean, the trade war is not the real war, okay? So these are the things that we have to look into, and we can study back. I think in 2018, when Donald Trump was in place and he declared a trade war with China, what happened to the market? What happened to gold? What happened to dollar? These are the things you can study back. And maybe one day when he already won, and then you know what to do next. These are the geopolitical event. Okay. And the thing is OPEC, obviously, it's just because of it will just impact on the oil. So we know previously oil price has been kept at below $80, and all the oil export nation are not happy with the price, because they rely it a lot, because from the export the oil they get the profit to fund the government expenses. But when the price is as low as below $80, even below $77, it is not profitable for them. So they group together, they want to they try to intervene in the oil price. They start to cut the oil supply in the market. So when they do something like this, then what is going to happen to the oil prices. But at the same time, not just what they say, it will matter to the oil prices. We also at the same time have to look at other things. We have to look at the demand side, because OPEC is always have an impact on the supply side of the oil markets. But at the same time, we also have to look at the demand side. Is the global economy performance is good? They're going to demand for more oil, or things happens like China is slowing down, maybe the second largest oil importer, India, China, the economy maybe is slowing down, then it will definitely have a direct impact on the demand for the oil and will resulted sluggish oil prices. That could happen. Okay, this is OPEX. It is the news that we always have to pay attention to. Okay. Fourth is macroeconomic event. So what are the example for macroeconomic event? Like I say earlier, election. So maybe when US election, UK election, and then the European, the ECB, they change the chairperson. These are the example of macroeconomic event. Other than that, like a banking crisis. So remember last time we have the banking crisis in the US, and also previously we have the fraud, that happened in the crypto market, or like much early on we have the Brexit. Those are the example for the macroeconomic event. Those are the things that we also have to pay attention at, because it will also have a direct impact on the currency, and if not, oil and gold. Okay, these are the things that you can note it down. So next time when you see something like this, you smell something, and then you make your own judgment whether or not it's have a positive or negative impact on the things that you trade, on the asset that you trade. Then from time to time, when you gain more experience, then you should know what news that we should look at when we trade some things. And if we are very, very good at it, we know when the news come out, you'll have a big fluctuation. If you trade on a correct direction, boom, you earn a handsome amount of money. Okay, second is trade on an indicator. So like I said earlier, it is much easier than the news, because news, when it's like telling a story and we don't know whether or not this is a good or bad, like 100% on the things that we trade. But economic indicator is the thing that we can track. There's like a track record, there's like a previous like a history reading, and then we can make comparison. For example, the things that I always say is the CPI. Okay, just that I always discuss early, CPI, we can track whether or not this CPI is higher than the previous reading, or it is much lower than the previous reading, or is against the market consensus, the market expectation. So when this thing comes out, and also every first Friday of the month, we have the non-farm payroll. Then we can make a guess. We can predict the number of the non-farm payroll. And by the way, we have this promotion with PU Prime. You can always go there and guess the upcoming non-farm payroll. And then if you are very good at it, you are the closest person to closest to the exact number of the NFP, you can walk away with prizes. Okay, you can check it out with on our official website. Yeah, so it is like a more predictable, and trader, you can make your own analysis and on the past result, and then you can place your order accordingly to your analysis. Okay, so what are the economic indicator that we should look into? I put it in a 3 category. This 3 category, or this 3 factor, is the one that will have a direct impact on all the things that we trade. First, we always look at the economic growth. Okay, economic growth definitely very important. When we see a country that have a very high economic growth, we have a confidence with the currency, and you can imagine the currency to appreciate, and then people will require demand higher of this particular currency to trade with the country. So economic growth. Secondly, job data. So when the economic growth is good, when the economy is healthy, when the economy is performing well, definitely it will result in a very good job data. So from looking at job data, we also can tell how healthy the economy is. Okay. Thirdly is inflation. This is the downside from a good economy. So when the economy is too good, it will often result in a high pricing pressure. People pay more and more when the economy is good, because everyone have money. For example, we have 1,000 people want to buy a Coca-Cola, but in the country we only have 100 cans of Coca-Cola. but everyone have money because the economy is good. People will try to pay higher and higher to get the Coca-Cola, right? So when the economy is good, when everyone is have the spending power, it will result in a high inflation. And also when we know there's a high inflation, we know often the the central bank will start to take action. They will start to control the markets. They will start to tune the interest rate to control the inflation. So this will also have a direct impact on the currency because we know what's the central bank is going to do next and what it will happen to the currency. Okay. Yep. So I come up with this table, and you guys can mark it down. Okay. What economic indicator under the category of economic growth, what are the indicator that will reflect the job condition in the markets, and also what are the indicators can tell the inflation situation in the country. So these are the things that is very, very important, and I can be very confident to tell you when all these things come out, it will definitely stir the price movement of the related asset classes. Okay, GDP, PMI reading, and PMI we have like the manufacturing PMI, we have the service sector PMI. Okay, and then we have the retail sales. This is like how people are going to spend, things like that, and then definitely the non-farm payroll. Non-farm payroll is like a superstar. Okay, economic indicator in the market. Everyone look at it because it will have a very, very direct impact on the USD as well as other pairing. Okay, and unemployment rate. So tomorrow we will have the Australia unemployment rate, and also there's like a no rules of thumb. You cannot tell like 3% unemployment rate is mean the job markets is doing okay, and if we have 4% unemployment rate, it is very, very bad. So it's not like that. It's applied accordingly to different country. Every country have a different condition, situation, and every country have their own rules of thumb. Towards what level it means the unemployment rate is bad. Towards what level means the unemployment rate is reasonable. We don't care, or it's good. Everyone got a job. Okay, so this is a bit hard, but yeah, average earning, like I say, like in Japan. Why? Because they observe an increase in the earning growth. Okay, the paycheck, they can earn more money. The people in Japan can able to earn more. That's why the BOJ only start to consider the shift of the monetary policy. So this is also very important. And for example, now when the US is having a very high, not high, still trying to tear down the inflation. But if you look at the average earning growth rate and you see there's a high increment, it means people are getting more and more money, and then as a result, they can spend more. The spending power is higher. It will result higher or stagnant inflation. Means the inflation rate will just stay there, and this is not what the Federal Reserve want to see at the moment. So if you look at the earning growth and you see the earning growth is high, then you can expect the next move or what's the Jerome Powell going to say next. He's going to say something like, "Oh, I think the economic performance is still very, very good. Everyone is earning enough money. They want to increase the interest rate, things like that." Okay, and needless to say, inflation, we have different kind of method to calculate or justify the inflation situation in the country. Okay, so in the case of Federal Reserve, they always look at PCE. Okay, you can go to investing.com to see what is the PCE, what's the different, what are the components they use to come up with the calculation to get the inflation number. Okay, this is PCE is the Federal Reserve preferred gauge for inflation, but other countries don't have. Most of the time we look at CPI, and also I think PPI, if you compare amongst them, is the least favorite reading, okay, in the markets. So have you guys marked down already? Okay. Moving up to the next one is the market volatility. Like I said earlier, I think some of you guys are enjoying when the market is very volatile, because there's more chance for you to make profit. But maybe some of you guys here same like me, because I'm not really enjoying when the market is very volatile, because sometimes it's out of hand. And then because sometimes when it's go a very different direction that I predicted, then I will just very quickly hit my stop loss, which is I not really like it. So but I want to tell you guys things is at different time we have different level of market volatility in the market. So by saying like this, I think it's hard to tell. I'll just pull up a chart and show you guys. So here this is the GMT +8. And you can see the time over here. You can see the time over here. Okay. So this is when the US opening time. Okay, and you can compare the market volatility here and the market volatility here. So this is always at the US market opening time, which is about 1 hour away from now. Okay, and again here, same time. It's happened here and here are the same time. So you can compare the market volatility across here and the market volatility then. You guys, so for me, I often if I apply a scalping strategy, I will prefer to trade here, because I know when it touch here I can long, and when it touch here I can short, things like that. But here sometimes it's unpredictable. Okay, this is GBP USD. So next one we look at euro. It is the same. Okay, you can see the market volatility over here and the trend over here. So here is also when the US markets open, which is 1 hour away from now. Okay, and it's the same over here when the market spikes up. Okay, it's always at normally a European market opening session and US opening session. So it depends on you whether or not you enjoy when the market is volatile or not. Okay, next another example is here. It's very obvious. It's the same 9 o'clock, which is 1 hour away. Okay, so when the US market open, it is very volatile, very fluctuates, and you can compare the market before that is very quiet. Okay, so these are the things that you can take down. Okay, I don't know where you guys come from. Maybe some of you guys from Euro, some of you guys from America, some of you guys from Asia, and then you can know when are you guys going to trade, at what time, and whether or not you enjoy a risk, you enjoy a very fluctuate market, or you rather the market to be more quiet and you can have more control. Okay, so yep, this is the time zone. Okay, so and then when there's like a overlapping session, especially this one when the European and the Americans, they are awake, they are highly participates in the market. So these are the time that usually have the highest market volatility in a day. So which is about 1 hour or half an hour from now. You can observe that later on after this session. You can see the first 2 hours when the US open the markets, and the next 2 hours after the US open the market. I can guarantee you the market fluctuation is very different. You can tell. Okay, so you can do a calculation. So this the US opening session is 1 hour away from now. So I don't know what's the time with you now, and also for the Euro opening session, I think is 3 to 4 hours before we have the webinar. Okay, and then the Asia is 5 to 6 hours before the Euro market opening session. So yeah, we know sometimes when you gain a lot of experience, you know what's going to happen next. Yep, you can make handsome amount of money, but I'm here. I'm responsible to tell you that the risk management is the key. So you definitely have to stick with a very, very strict risk management. Okay. Okay, the third one is leverage on the platform promotion, because I know some of the platform, they are very prominent, they don't give a lot of promotion, but some of the platform like us, we are quite young, we give out the promotion, and I want to shout out with this 50% first time credit bonus. Okay, so when it's like when you deposit like 100, you get 50%. Okay, some of the country we have 30%. Okay, so it's like you get $50 more of the trading credit. If you deposit 1,000, you get 500 of extra trading credit to your account. So this is the calculation that I come up. So you guys know what is margin levels, right? So when we hit a 50% margin level, it means that the things that we trade, the position that we have will start to liquidate. Okay. And I come up with this, is like if this platform that don't give out the 50% credit bonus, trading bonus, then this is like nothing. And then but the amount that we can lose is 950 with $1,000 of deposit. But if like Pure Prime, we offer a 50% credit bonus, it's like you get 500 extra, and you're allowed to lose up to 1,450. Okay, so this is the difference. So when I tell you like this, is like, you know, you hard to imagine. I'll apply it to a real life events that maybe you can have a better understanding. So first, the bracket over here is without credit bonus. So like say I deposit a 1,000 USD in a trading account. Okay, if I open one lot now, okay, estimate one lot of a standard lot size of gold, I require to use like 450. So I only allowed to lose how many pips? 775 pips to close my position. Okay, remember 775 pip. But let's say if I have this credit bonus, if I deposit 1,000 and I got like 500 credit bonus, so my total trading equities will be 1,500. Okay, so again, I open a standard lot size of a gold contract. I need to use a 450 margin, but the difference is I can lose 1,275 pips before my position start to be liquidated. So this, you can tell the difference is very, very huge, right? From 700 to 1,200. Okay, I'll give you a real life example by using gold. Okay, this the chart, this is like some random chart. Okay, I just give you this scenario lah. It is not 100% true. It will every time you know you will meet or encounter a situation like this. Okay, for example, here you see a downtrend, and then you see this bullish engulfing over here, and the second candlestick to confirm there's like a trend reversal from here. And guess what? Maybe you can try to open a position here. And when you open a position here, you guys can see this. There's a very long tail here, long tail here. And how many it costs? It costs us 900 pips. So if you have no credit bonus with you and it hit 900, like nearly 1,000 pips, you already close your, your position is already liquidated. And guess what? You cannot enjoy the uptrend later on here. The uptrend come later after we have the long tail. But if let's say you have this credit bonus, you're allowed to lose up to 1,200 pips. Your position is still here. You're still not, you're not still not liquidating your position, and you still can enjoy the uptrend here. So this is like one of the examples. So you should know every time when you pick a trading platform, you should be aware what other promotion are they available there that can help you to tank your position. But of course, when you are good enough, professional enough, we don't look at this thing. But just that when we are a newcomer, we are new to the trade, we are amateur, then maybe these are the things that can help us to keep our position, right? So, yep, lastly, what are the upcoming economic events that you guys shall pay attention at, to monitor? Then depends on you whether or not you love to trade on news, you love to trade on economic indicator. That is up to you. But my advice is I always wait at least half an hour or 1 hour later to double check, double confirm with my analysis. Only I get into the market. I only go for the second wave. Okay. So for tomorrow, we will have the job data. We'll have the initial jobless claim. Okay, and then we have the manufacturing index. So this is kind of like a PMI. Okay, it's not so like super important, but next Thursday we'll have a very super important economic indicator is GDP. So US GDP, we can see whether or not the US economy is in good condition, and then towards the strength of the dollar. Okay, and remember I said earlier, next week we will have the BOJ interest rate decision, and what they say after they announce the interest rate decision, the monetary policy, that will be extremely important. That will definitely have a direct impact on the Japanese yen. Okay, so this is the thing that we should look into. And also after that, the following week, we will have the Euro CPI as well as some the PMI. So these are the things that is, well, I would say have the impact on the especially USD, and some is Japanese yen and then the euro. Okay, for the China, because a lot of us here we don't going to trade the renminbi, right, the yuan, but it will impact on the oil demand. So when we see that manufacturing PMI is good, it means that maybe there's a chance for the China to demand for more oil, and then we will trigger oil to trade higher if the manufacturing PMI is good, meaning the reading is higher than the previous reading. Okay, yep. So here is the end of today's session. I shall take question. If you guys have question, you can type up in the chat box. Okay. So Mark Gatti, during news, how can I know the direction of the markets and what is the best time to enter and execute a trade? I think I almost answer during the session. So it is very hard to tell, okay, for especially for news, because we really don't know 100% how the market perceive towards the news. So I would say the best time to enter and execute a trade will be half an hour or 1 hour later. Because me personally, I don't really enjoy the big spike, the very huge fluctuation in the market. Because sometimes, you got lucky, you make a handsome amount of money, but sometimes when you're unlucky, you will just lose out very quickly. So no, most of the time, I will just go in like 1 hour, half an hour after the news or the economic data come out. Okay. So any question from you guys? So the homework for you guys for today is you observe the market volatility later. So I think about like half an hour later, we will have the US markets open, and you can observe the market volatility from 1 hour from now to 2 hours later. See there's any changes. If no, then you can come back to me next week and tell me, no, hey, no, there's no changes in the market volatility. Okay. But okay, this is the homework for you guys after this session. Right. So if there's no any more question, okay, I think we can end it here. So once again, thanks guys for coming, join us, give us a great support. Really lovely to see you guys here. So again, we will have another session next week. I shall meet you guys in the next webinar. Thank you everyone. Bye bye.